Okay, here is Arif again, and we are going into the real thing now. Since I've done with this, and I'm going to focus on the setup area. So I'm going to make it very simple and very straightforward, not too long. I don't want to make long videos at all. So I'm going to talk about all this, but we might have another video on this breaker of a thing because this is the resource. Okay, so if you want to know direction, breaker is the direction. The breakaway is the direction. You can see the resource is breaker to breaker. And when we finish this, you will know what I'm talking about. So without further ado, quickly I want to talk about something very simple and important. First of all, whether we are science student or not, we must have done something about graph before. And graph, we always have y-axis and x-axis. This is our y and this is my x. So if you go to your charts, you can see from here, this is my y, which is price. This is my what? X, which is time. Okay. If I ask people, most of my students, that what are we talking about, or what many mentors have been talking about, they are talking about price alone, and even some of them that will be talking about time, they don't understand it better. Okay, so I will be giving you two specific time. Okay, when we get to entry point. Okay, two specific time that we talk about using every day as intraday trader, and there's nothing a graph cannot complete itself without having these two axes. Okay, you must have it. If you don't see it or you don't understand both of them, you are not going to be profitable very well. Okay, I know, so some people will say, but I've been using price for many years and profitable. When you make money, just that you manage your risk very well, and then most time you are in alignment with the time area also. So I will not be saying too much about this. So let's go to our work for today. So the first thing that we'll be discussing, as you can see from here, is called fair value gap. Okay, so I will just use my charts immediately. So don't let us waste time. And I will show you on monthly time frame or weekly time frame. Let's use it. So I'm going to make it big. When we are talking about fair value gap means you are looking at when price drop or rally or rise up aggressively and there is gap between. Let me use an example like we have here. Let me use an example for you. Let's say we have bearish candle. In this case, to me, this is bearish. This bearish candle, you can see another bearish candle, and another bearish candle. Here we now have also the week of the bearish candle. Week here is also under week here, and this week here. Okay, when you see series of a fair value consists of three candles like that, but the same direction. So when you see series of candles dropping like this, in between candle one, in this case, let me label it. This is candle one. This is 1, this is 2, and this is 3. You will see that price is just dropping. The low of candle 1 in this case and the high of candle 3 is our fair value gap. Okay, opposite of this is when price is just rallying up. Okay, so we don't need to waste time like that. So example of what I have shown here is candle 1 here also. Let's label it 1, 2, and 3. So this is just the fair value gap. The low of candle 1, the what? The high of candle 3 is what? Fair value gap. Let's clean everything. So yeah, you see another one here. We have high of what? Candle 1. You can see that the same, it's not the same candle here. You can have that type also. Candle 1, candle 2. This is fair value gap also. This is fair value gap, candle 1, low of candle 1, high of candle 3, fair value gap. Like that. You can have it. Even here, we have fair value gap here. I just want to show you quickly. We have fair value gap. All these ones are balanced in one way or the other. We have fair value gap here. This high and the low of candle 3, fair value gap. So if you go back like that, you continue to see this. Let's go to daily time frame so that you see that it's the same thing. You don't need to disturb yourself. High of low of candle 3, high of candle 1, fair value gap. The same thing here, candle 1, candle 3, fair value gap. All the way, candle 1, candle 3, fair value gap. Even this one is another fair value gap, candle 1, candle 3. So in ICT, from my mentor, we have so many what? PDRA, we call them PDRA. I call them setup here so that it will be simple. Set of foundations. These are the foundations. So as we are seeing fair value gap now, I don't think I need to show you more example about that. Fair value gap here, candle 1, candle 2, candle 3 high, candle 1 low, candle 3 high. You can see price come to it and drop lower. So it's a foundation for your setup. Foundation for your what? For your setup. If you want to understand what I'm saying, you put it here, fair value gap here. You can see price come into it and rally off again. Now, what about the balance price? The balance price is an overlap fair value gap, or let me say fair value gaps. Overlap fair value gap. So how do we work on that? You just need to see two fair value gap overlapping each other. Two what? Fair value gap overlapping each other. I will look for it if I can search. You want, yeah. What we have here is a fair value gap in here. Let me enlarge it so that you can see it clearly. Now, we have fair value gap here between this high and this low. Same time, we now have another bigger fair value gap here. So price usually respects both. We respect it. They are both fair value gap, but they overlap each other. Okay, you can see price respected it here. Okay, lower. Let's look for another example. Another sample for it, and then we'll be good to go. Let me look, let me see. There is one here, tiny one, overlap here. Even there is, okay, it's a little bit closer. But I can see there is one here, overlap here. Okay, so you just need to look out for it. Even this one to this level, it's overlap fair value gap. This, let me quickly do that. This high, and this high, and this low, And we have another fair value gap here, this low and this high. You can see they overlap each other. So price usually respect them. If you don't understand what I'm saying, then quickly draw something on it so that you see. It's a fair value gap here. Another fair value gap, even here. You can see that. So price respected it. And there is another even fair value gap here. But I don't want to jump out the chart. Okay. So if that is the case, you just need to maintain seeing those fair value gap and balance price, overlap fair value gap. So it's more important that you understand this. So the last one that I will talk about today is the old low and old high. This is fundamental also. When price reach even a spot that price has been to before, if like this one now is an old high, price can reject it and start coming down. Okay, that's what I want you to be looking at, old high. So if you go deep into the market, you see, let's go to monthly time our data. Okay, look at it, weekly time frame. Here also we have old high. You can see that old high. The same thing is for old low. But I will be talking about specific high that you'll be looking out for or specific low that you'll be looking out for. Don't just choose. In the past, we just choose anyone. Okay? In the past, look at this. A low here is taken out by this. If I'm right, yeah. It's taken out by this. Even this one here. So you don't just take any low. Yes, there are specific things that you need to look at. That's why I said time and price is very, very important. So look at even this. You see that there are specific lows and highs that you must look out for. Okay, sorry about that. So I think we are a little bit clear with that. If we try to look out for breaker now, I will try to explain the breaker in a very simple form. We know from the genesis or from the start of our trading as a trader or as traders, we are taught higher high, higher low, higher high, higher low, like that. But once price break this higher low here, they will say we have break of market structure, or those who that we're talking about neck and all those stuff, head and shoulder, all those stuff like that. So that price will come down. The same thing, or let me say the same way here, but we know that a breaker is a failed OB. You don't know what an OB is, go online. OB means order block. Go online, look for it. Once price is moving up, breaking barrier here, this low is important. Very, very important. But once that low is taken or broken, the order block here, that is the last bearish candle before this push up, will be an order block. But once it is broken, it becomes a breaker. That's why I said I will have to make another video for this. So that once it is broken, the direction that was bullish before on this time frame, it can be any time frame, is now bearish. Okay, it's now bearish. So let me quickly show you a breaker before we go. I don't want the video to be too long. A breaker before we go. Let's quickly see this. You can see price was creating a low here, higher low here, a higher low here, then another new high. But once price close up below this candle, this last bearish candle, once price close below it, we are now in a what? In a downtrend. Then we call this candle BR a breaker. Okay, and you can see, like the first video that we made, say this swing that is coming down did not break this. Price has to go beyond this beginning, the genesis. Then it came down. There is a golden pattern here, but I'm not going to talk about it now. So breaker is very, very important. You might say, okay, you are just seeing this on higher time frame, even last year or so. This is another breaker here. Because price broke it here, price went up. Okay, but I'm not talking about why it went all the way up here. It just want to see a breaker. Even this candle that we have here, you can see price was getting down lower. Okay, but price broke this last bullish candle here. That make it a what? A breaker also. So by the time I'm doing the video on breaker again, this is what I'm expecting, but anything can happen. Don't let me talk about that lesson yet. So let's just see. The breaker is very, very important. And you can see from the beginning, I was talking about the setup foundation. You need to know these 4 PDRAs to function well in the market. Know the 4 PDRAs to function well in the market. You can see this is another breaker here. It's the last bearish candle before the push up that took out this high. Then price broke it now. Now it has become a breaker. Okay, so anything can happen. Just continue to watch. Okay, so our topic is getting close to where the resource is. So I'll be doing another video on what? On breaker, and you see that price is very simple to read, but the time is of most important. Bye for now. Thank you for watching.